Aloha from Maui, everyone. Joshua Hayes at BigWaveTrading.com. I hope you are having a wonderful, long Memorial Day weekend. I'm still getting over a weird cold that I got, so if I sound a little funny, my apologies. Try to make this really quick. Just going to go over the long positions in the market really quick. The IWM is starting to pull back off those recent highs. I now would like to see basically resistance become support right here. So hopefully we can hold that line, move up. If not, we have the 10, 20 day, 50 and 200-day moving average to act as support levels. So we'll see if that can continue. We closed out Friday perfectly, pulling back in every index but the QQQ, and even that overall is still within a tiny, excuse me, handle with a kind of like a cup with handle. It's not really. They don't work on the indexes, but it's a nice tight little consolidation. We'll see if that continues. But the DIA and the SPY are doing exactly what I want to see. What would be perfect? We have one more week of May left. It would be perfect if we consolidate for the rest of this week. And then after consolidating for this holiday shortened week, when the positive seasonality of June comes around, we start to trend higher. If June comes around, we start to trend higher on above average volume, I am going to start increasing the size of my long signal. So I'm going to start increasing my asset allocation per signal. That's only if everything lines up. Excuse me, everybody. I'm so sorry. So if everything can line up, perfect. Then I'll start increasing asset allocation. But even if that does happen, I'm fully invested, which takes us to our new long positions. Following Friday's session, I had about, I'd say it was a slightly over, I think it was right around like 15 trailing stops hit intraday. I'm holding a ton of stops on a ton of positions, so 15 isn't that many. Only costing me $1 each time a trade happens. And out of those 15 stops, over 90% of them are for profits. So I'm in a very good situation, but I've only raised 2.5% capital. And with 5 new long positions and an ad signal, I'm going to have to split that capital up evenly amongst them all. So they're basically all going to get only about 0.5% of my capital each. That's still $2,500. Each of these is still going to get invested by me with $1 commissions. So keep that in mind. That's what 0.5% of account capital is for me. It's still worth it. Now, if 0.5% of my account capital is $20 and I paid $1 commissions, that's not going to work. You're going to have to pick the best one. So like, let's say you only have $500 to invest with. Come Monday, you've got to pick the best one. And if we're going to do that, then we'll start out with SEDG. On all of these, if you obey my first recommended stop level only and give this stock a chance to explode, you're looking at greater than 5-to-1 reward risk ratios on all of these. But SEDG, this is a CanSlim quality stock. Perfect speculator quality stock, confirmed in my price volume BOP scan. I want to get long at the high today, 60.10. My first cut loss is right there. 54.55, and since the first cut loss is so tight, I'm willing to give it room to work to the second one before I fully cut and run. 50.45. But remember, as always, per the rules, the first stop goes, we lose the green BOP catalyst, or we do it on heavier volume, I start consolidating and raising that stop higher. So we'll see if SEDG works. But this one's right, the 50-day moving average. It's not extended from any short-term moving averages. You had big volume at the end of the day, the session before on Thursday. Friday, the hammer candle price bar right off the 50-day moving average. That's what you want to see. Then next quality long position was only in my CanSlim scan. It was not confirmed in any other scan except for my final tertiary scan that looks at any stock up on above average volume and green BOP. But it's a pocket pivot point signal. Even though it's extended from the 20-day, it's right at the 10. Pocket pivot point signal, candle over candle price bar signal. Want to get long, since this was only in the CanSlim scan and it's extended, 0.5% of my account capital anyway, so that works out. 81.72 the limit. And once again, initial first stop right there, 79.24. Very tight first stop, and because of that, I will then only have one other stop down here, 71.51. Same situation. Violates this low on heavier volume or while losing green BOP, these stops get consolidated and raised. I'm not sticking around. AMAG, this stock was in my perfect speculator scan. It was not confirmed in any other stock. But since this gap up and go, move right here, pull back on light volume, move higher again on heavier volume, pull back on lower volume, move up again on heavier volume, pull back on low volume. Now we have a bullish full body candle over hammer candle price bar. We have the rising green bop, and it already went green a couple of sessions before. So this is what I consider a nice ebb and flow, ebb and flow, ebb and flow. So with that being the case, if I go long AMAG right here at 2370, my first cut loss level really reduces my risk. You can use this level, but for me, my first stop will be right here, 2250. I will then have two other stops, so a third here, a third right here at 2015, and a final third at 1835. AMAG breaks even below this low here, excuse me, on heavier volume or while losing green bop, once again consolidating and raising the stops. I'm not sticking around to see, oh, if it can hold these levels. Now, if it starts pulling back on light volume and the green bop keeps growing, yes, then those stops will remain on the books. But if not, we'll be moving them up. AMAG also is slightly extended from its 20-day moving average, so it also is only a 0.5% of my account capital position. And then OMP, this is what I love to see. Would rather see this right off the. You ever see a long basing stock and then it puts in a move like this today, where it's a nice bullish hammer candlestick price bar, and you see price and bop or volume and bop surge like this? Look at the volume bars. Look at how they truncate in the middle after Friday's session, and look at the green bop. Look at how it explodes higher above anything even remotely close to what it was before. So that's the kind of price volume bop surge move that I love to see, but I don't like to see it when it's extended from its 20-day moving average. So it's not perfect. So definitely not one you can load up on. But you could load up on it if you think it's going to move higher immediately. And if it doesn't, you cut your loss at the first level. So if you want to put 10, 20% of your account capital in this one, you're more than welcome to. But if you do, your limit order needs to be the close, 1891. You don't pay more for it. You can pay less. And then your first and only cut loss level needs to be a move below this low, 1860. Now for me, because I got an initial first tight stop, I'm willing to give it to this price bar low right here, 1805, or you could even give it to this one right here, 1778, if you're only putting 0.5% of your account capital in it like I am. Now, because it is an IPO and confirmed in my price volume bop surge scan, it should have been 1.5%. Got a half it since it's extended, so it should only be 0.75% of my account capital. Now remember, in good markets, the best stocks, they'll get 5% asset allocation for being in the CanSlim scan, 5% for being in Perfect Speculator, making that a 10% move, and then they get an additional 1% for each scan it makes. So if it shows up in 4 or 5 other scans, you could have a 14-15% long position. But in this tape, 0.75% for OMP. And then XENE. XENE, I've been watching this one in my Perfect Speculator scan since March. See it almost every day. Actually, I do see it every day that it closes higher because I scan all the stocks up all the time, Perfect Speculator scan. Following this move right here, I started to really crave an entry, started to really want an entry whenever it did this, but then it had this strong day, and I was like, I'm screwed, can't get it. But now it's pulled back. While volume hasn't been light, it's pulled back with max green bop the entire way right to the 50-day moving average. Bullish hammer candlestick price bar right off the 50-day moving average. Since it's still in my Perfect Speculator scan, that's good for me. So Xene, 1% for being in the Perfect Speculator scan, 0.5% for being in the max green bop for 5-day scan, and 0.5% for being in the green bop for the past 20-day scan. So technically, this is a 2% long signal, but it's low price, and if you do put 2% or 20% of your account capital into it, you want to obey the parameters. Limit order 560, cut loss, your first and only one at 520. Me, 520, and then right here, 445. So if it moves below 450, I'll be completely out of Xene. Once again, the first stop level for the next one comes, cut your losses. I have failed miserably at making this video short. I just cannot do it. Everything seems to be 10 minutes. My apologies. BCML, this is the final one. This is the ad signal. This is a CanSlim quality stock, and even though you can't tell Oh my gosh, I'm so sorry, everyone. This is a newly listed IPO on the NASDAQ from the over-the-counter bulletin board. Sometimes Telechart has old over-the-counter data, sometimes they don't. This time they happen to have it. So BCML IPO'd on the NASDAQ sometime in here or here. I don't know, but sometime in this area it's IPO newly on the NASDAQ. They went ahead and added all the old over-the-counter bulletin board trading data, so you see all this beautiful green bop in this chart. These are the charts that I love, but I only love them just like I was telling you about the OMP price move when they're from long consolidation patterns off the 50-day. This one, like so many of the others, is slightly extended from the 20-day moving average. So what we're going to put into it, it's got to be halved because it's an ad signal. Then it's got to be halved again because it's extended from the 20-day moving average. So BCML, it's Cansom quality. It's an IPO. It was in my green bop for the past 20-day scan and in my max green bop for the past 5-day scan, joining ZENE and making both of those scans. BCML, it's something like 0.62% of my account capital. So I'm supposed to be allocating to it according to my rules. 2405 is the limit order. Multiple stops, 2344. Then these lows right here, these two candle lows right here. So it's this low right here on this day, 2015. Then, oh, I'm sorry, I'm looking at the wrong one. Sorry. 2344. This low right here, 2293. Then this low right here, 2249. And then this green bob pocket pivot point low right there at 2189. All right, everyone, sorry, I failed miserably at a short video. I just can't do it. They all got to seem to be 10 minutes long. Once again, enjoy the rest of your long Memorial Day weekend. I will see you in the chat room Tuesday morning, where hopefully I'm feeling a lot better. Aloha, everyone.